the Baltic Dry Index has been ticking up this summer, even though Chinese exports have been slowing down. Here to put it all in perspective is John Wobensmith. He's the president of Baltic Trading. Welcome, John.
Thank you.
All right, so why is there so much iron ore going to and from China and all these other places in Southeast Asia if the economy is slowing down?
What's interesting, the steel industry and steel production in China has been up 7% for the first half of this year. And so that obviously requires a lot of iron ore. The numbers are the same on the iron ore side, up 7 to 8%.
And your stock, which to a certain extent tracks the Baltic Dry Index, is up 32% this year, still down from your 2010 IPO, which was, I think it was about $14 your
Right,
IPO.
that's right.
And now you're over $3, but you're having a great year so far. What do you foresee for the rest of the year?
Yeah, we're seeing a slow pickup in dry bulk freight rates. We probably bottomed towards the end of last year, early this year, and now we're starting a slow climb out. We think next year is really the recovery year.
And what happened to your industry since your IPO? Was it just overshipped because you came out in a real rough period,
Right.
And now you're coming back though? Just too many ships out there?
There are too many ships. I mean, if you look at what's happened on the demand side, both iron ore and coal have been up 7 to 8% growth into China and into India. It hasn't been a demand problem. There have been too many ships that have delivered over the past few years. Asset prices have come down significantly because of the drop in freight rates. And now we're seeing a point where supply has really leveled off. Just to give you an example, there were 36 ships delivered through June of this year versus 76 last year. So a real, for the month of June, a real downturn in the number of ships, and freight rates have started to recover because of that.
And what about the commodities themselves? We've seen the price of commodities really fall off with China slowing from 8.5% to 7.5% to 7%, wherever it is now. How does this affect Baltic Trading?
Well, what's been happening, again, is demand growth on the iron ore side, as I mentioned before, but also somewhat of a substitution effect, because imported ore, with the price coming down, has actually displaced Chinese domestic ore, which is lower quality, more expensive to actually produce, and use in the steelmaking process. What that translates to is increased volumes of iron ore that are moved on our ships going into China, which is obviously better on the freight rate side.
All right, and then finally, you've been paying a dividend for, I think, 12 straight dividends. What's your plan for the dividend going forward?
I mean, listen, the dividend is very dependent on the freight market and revenues and net income. Seeing a recovery going into next year, obviously one would hope for a dividend move up. We also added 2 ships that we recently acquired in the fleet, so we've taken the fleet size from 9 to 11, and we're going to be getting those ships delivered in September of this year.
All right, thanks a lot, John.
Yeah, nice seeing you again. Thank you.
Thank you for watching The Street.